Busy afternoon here. Hasn't been a busy enough day already? Well, just stick around. We got Nike and we got Micron earnings coming up. Let's talk about the former Tammy Trenta joining us, founder and CEO of Family Financial LLC, back on the show. Tammy, good to see you.
Hi, Oliver. It's nice to see you again.
Likewise. Okay, so we've got a pretty big number coming out. Nike's been getting killed like everything else out there. Does it belong down here in the dumps with all the other stuff?
Yeah, I mean, as you know, stock prices are reflective of the next 6 months, and I don't think it looks good for consumer discretionaries in the next 6 months, especially Nike. They're down 53%. And I think they will face some tough market conditions until things stabilize. They have one line of business. The profit margin is quite narrow. So, I don't think that I like the concept of direct to consumer, but I think that's tough in an online environment. And I don't know that adding more stores is going to solve the issue.
So then is it just a matter of waiting before the consumer has all that buying power back? Or is there something they can do executionally or managerial at this point?
For Nike, I think it's a wait. There are some consumer discretionaries that are maybe more of a necessity than Nike, but it's a stock I would stay away from for the next 6 months.
Wow. So when we're looking at expectations here, what do we want to hear from them? What can give us an idea that maybe things might improve 6 months from now?
I mean, I think it's got to be like a Hail Mary pass. I don't think there's any denying that we're in a tough economy. Spending is continuing to slow, so it's hard to look positive. Maybe we'll be surprised. It seems like a lot of these companies are posturing and giving a more grim outlook going forward because they know we're in an uncertain environment.
Yeah, it certainly seems like at this point, the Nike magic has dwindled a little bit from people reselling shoes for thousands of dollars back during COVID. How does it fit into generally your thesis right now, Tammy, about where investors should be putting their money? If we can't trust Nike to do us right, what can we trust?
Well, I really like the tech sector right now, and I might be one of those outliers, but I think in any uncertain economy, stock picking is challenging because we have a tug of war between the Fed and corporate earnings. And although Q2 GDP tells us we've hit a technical recession, corporate earnings have remained strong. So I think the next 6 weeks will be telling whether the economic growth is slowing. I believe we're in for a longer period of inflation than we originally hoped for. A few high-level comments, but we're entering month 10 in a bear market, and we've had a number of interest rate increases, which I think can take 12 to 2 years for that to affect monetary policy. It doesn't seem to be curbing spending thus far, except perhaps the housing market, but eventually that will happen. So I think the next 6 to 9 months will be volatile. And so what I'm looking for is some solid growth companies that have reached a value price. The metrics that I am looking for now are free cash flow, debt to equity, price to earnings, and profit margins.
We got Micron after the bell and the chips. Does that pique your interest?
The ones that I actually am looking at right now are Apple. Apple has a free cash flow of 5.5%. I like to see free cash flow above 4. It has a debt to equity of 2, so it's right in that sweet spot. And, it's not undervalued, but the forward PE is 24, making it a reasonable price. And they've got great profit margins. What I really like about Apple is, 87% of their customers have brand loyalty. So they're going to be less likely to switch during some tough times. And although they may sell fewer iPhones, they're the largest company in the world, and they have 57% of the smartphone market. So I think there's room for growth there.
Okay, so you're not worried too much about that Bloomberg article yesterday?
Which one about that they're going to sell more, fewer iPhones?
Yeah, exactly. Yeah.
That's part of, this environment that we're in. I think, Apple, yeah, it's a consumer discretionary, but people need their phones. And so I think that maybe there'll be some more volatility, but, at these prices, who doesn't want to buy Apple when it's on sale?
All right, there it is. Thanks for the thought, Tammy. Appreciate it.
Thank you.